Hello, everybody. My name is Thomas, and I see everyone's still pouring in, but let's get started with a brief introduction before our webinar called Choosing the Perfect Location. How to use JobsEQ for site selection analysis. So, like I said, let's begin with a brief introduction on the company. Who is Chmura? What we do is we provide labor market data and analysis so our clients can make informed decisions that help their communities thrive. We are founded in 1998 by Dr. Chris Chmura, who is one of our speakers today, and we currently have offices in Richmond, Cleveland, and Dallas. Who we are economists, data scientists, statisticians, and business professionals who care about helping your community grow. That is done primarily through our JobsEQ software tools, which are the most effective labor market data analysis tools on the market. JobsEQ can provide in-depth labor data all the way down to the block level. Chmura also provides consulting that can work with that labor data or even create a strategic plan for you and your organizations. We are driven by client satisfaction and success. And excellence is our first priority in customer service and data quality. We also provide a number of free services, including, as you'll see up on the screen, our weekly economic update. What is the weekly economic update? Written by our economists, including Chris. It's a national overview of the economy that's delivered every weekend straight to your inbox. If you look over to the right in the chat, you can see some of you have already posted, but if you want to leave your email address there, I'll collect it, email address and indicating that you want the weekly economic update. Just leave that there and I'll collect them and subscribe you to that after the show. If you look there, you can also post any questions you have for the presenters and we will answer those after the presentation. Now on to our speakers. I already gave her a little bit of an introduction, but Chris Chmura, Dr. Chris Chmura, is the founder, CEO, and Chief Economist of Chmura Economics and Analytics. She is a national thought leader on labor economics, including being a member of the Blue Chip Financial Forecasters. She has a passion for helping people use economic data to help their communities and organizations grow. Skip Carleton is a senior account manager with Chmura. He has previous experience with S&P Global Intelligence and FTSE Russell, and he currently assists our clients and prospects understand how Chmura's JobsEQ labor market intelligence data can help them make informed and impactful decisions that help their regional economies grow. Take it away, Chris.
Thanks, Thomas. So in this presentation, we're first going to talk about site selection. Actually, we're going to talk about the U.S. in terms of the rebound from COVID by industry, and then we're going to talk a little bit about site selection using JobsEQ to help in that regard. And then so Skip will give that part, then we're going to switch back to me and I'll give you a brief overview of how the national economy is doing over the short term. We're seeing some really encouraging economic trends. We're seeing progress toward herd immunity, although that's slowed a little bit more recently. We'll show you the data on that. And then I'm going to end with talking about some inflation concerns. So first, looking at employment impact during this COVID recession and the expansion by industry. So here, if you've been on our webinars before, you've seen this chart and we update it every time we get some new national data, but it's indexed in terms of employment. So we've indexed it prior to the pandemic starting at 100. And then you can see through the second quarter of 2020, it dropped off. So it's at an index value of 88. The way to read that then means that we lost about 22% of our employment through the second quarter of 2020. We've seen employment coming back. These are actual data through this point. And now we have two forecasts likely based on when we get to herd immunity. And again, after Skip speaks, I'll go over some of our latest data on that updated yesterday. Here you can see us getting back to previous COVID levels toward the end of this year or early next year. The likely scenario, and then the slow case where perhaps not as many people get vaccinated, or some of these other vaccine viruses that are popping up are not as effective relative to the vaccine. So this varies greatly, of course, by industry. And again, if you've been with us in the past, you've seen this information, and I'm going to peel back some of this so that it's easier to read. But again, we look at this information at a detailed level. Here you're looking at a 2-digit NAICS code, so North American Classification System, that's used by the federal government, and that's what we economists use to classify industries. So we didn't just do our analysis for the manufacturing industry, but at a detailed level. So we were looking at pharmaceutical manufacturing, for example, is reacting differently than vehicle manufacturing or shipbuilding. So we did our analysis at that level, then we summed it up so that you're looking at the average overall for these NAICS codes. So again, indexed to 100 prior to the COVID-19 recession. On this line here in red, you're looking at arts and entertainment, and in green, accommodation and food services saw the greatest declines. Now, of course, from a site selection or going after expanding firms, these are not firms that you go after. These firms tend to grow as the community grows. At the top here, this dark green line is agriculture, forestry, and fishing and hunting. And you can see when we went into the COVID recession, it dropped off about 6% in terms of employment, but then it sprang back quickly because, of course, food is necessary, and so agriculture continued, in fact, at a faster pace in terms of employment growth than we saw prior to COVID started. Then you can see through this orange line is actual data. It has slowed a bit, and then we expect it to continue to grow in terms of our forecast. Now I peeled away the red and the green, and we have a new red, which is mining, quarrying, and gas extraction. So you can see it didn't decline. It declined probably about 18% here. It didn't get all the way down to a 20% decline. And you can see over the last couple of quarters, it's been flat, probably, or slowly declining a little bit here, probably because of the pandemic, not as much oil, not as much gas being used. So the price of oil has stayed low. Recently, it's gone up, and we're expecting to see employment starting to increase in the next couple of quarters. The green here is other services. So this would be salons, religious organizations are under this group, and you can see it dropped off, but has been coming back fairly quickly. Still not yet to pre-COVID levels, but we expect that to happen toward the end of this year, and then some growth there going forward. This dark line, administrative and support and waste management. So this would be companies that service offices and factories. It may be landscaping, it may be waste management. But again, you could see it dropped about 15%, and now we saw some fairly good growth. But again, these sectors that we're looking at, not really those that you go after in terms of economic development, trying to grow in your region. They grow because of the region expanding. This dark gray area, similarly, education services had dropped off. We saw a little bit of an increase. We're expecting a little more of a decline, but then some strong growth as we see the schools opening up and kids going back to school in the fall. Now, here again, retail trade is in red, and you can see the drop off, but it came back fairly quickly. And as we go to the forecast, notice here that it does not get to the 100 line. It doesn't get to the pre-pandemic line. Retail employment in the nation is expected to decline just slightly, 0.1% a year. Part of that due to the Amazon effect, or people buying things online, which will reverse to some degree after the pandemic is over, but not totally. This gray solid line at the top is public administration or government, And you can see that government employment increased when we went into the lockdown. It dropped off a little bit, but right now it's still about 6% in terms of employment, 7 or 8% above where it was during COVID. It's decreased a little bit recently in the last couple of quarters, but then we expect it to level off at 5% above, or actually 7 or 8% above COVID levels as we continue to move forward. Now, a few more of the sectors that we have here. The green is the information industry. So this is a sort of an odd grouping to me. It could be media, it could be television. It's sectors or industries that provide information. It could be online information. And let me just flip ahead to this last one that provides some of the industries that you might be going after in terms of trying to grow your region, expanding firms, or from a site selection perspective, industries that you are helping to locate to certain areas. So in brown here, transportation and warehousing, you saw the jump up in employment after the COVID recession started. It then dropped off to almost 6%. And now we picked up again, and employment for transportation and warehousing looks like almost 4% above where it was during COVID times. So as we've talked to expanding firms and site selectors, they say that warehouses, there are so many warehousing houses that are expanding right now that it's hard to even have enough warehouses in your region, the inventory, for those firms to consider expanding into. So clearly, we're seeing all these businesses, Amazon and others, that need to be closer to their customer base. And so that's driving some of this. And of course, the pandemic has accelerated that. Professional business services here in black, another sector that didn't drop off as much because a lot of these people could work from home. And we saw a fairly good increase. We're already to a point now where employment is the same as it was pre-pandemic. And we're expecting that to continue to grow as we move forward over the next year or two. Now, these would be firms, again, that you might try to attract to your region, or maybe looking for regions that they want to move to that pay very well. It would include computer systems design. It would include accounting, R&D, and consulting firms. And then finally here in red is manufacturing. So you see the drop off here, and then we're still about 5% below pre-pandemic levels. And then we see it increasing, but the forecast is for it not to get to pre-pandemic levels because of productivity gains. However, this forecast, long-term forecast, was created pre-pandemic, and given the supply chain disruptions that we saw, we may see this become more positive. And I said, consider pharmaceutical, and that's one of the supply chains where we're seeing those firms coming back to the U.S. And another development that is just going through the Senate right now, and that some of you probably have your eyes on, is the Chips for America Act. And this is where I believe the Senate may even be voting on it this week, that it's going to provide up to $39 billion of federal incentives to try to get more firms to produce semiconductors here in the U.S. And it's also going to provide $13 billion for R&D for the semiconductor industry for here in the U.S. But again, that we may see passed this week from the Senate. And right now, we're already starting to see some very good growth in pharmaceutical expansion across the U.S. So with that, let me hand the microphone over to Skip Carleton to talk to you about JobsEQ and site selection.
Thank you, Chris. I appreciate the handoff. I hope everyone is doing well today. And just really quick, want to make sure that you can see my screen. Chris, can you see everything there?
Yes, I can.
All right, excellent. Well, I appreciate it. And everyone, thanks for attending today. We're going to jump into our JobsEQ labor market intelligence platform. And we're going to start from the top-down approach with more of a power query or a dynamic search rather than a static singular search where we know exactly where to go. So from a broader context, we're going to come in and take a look at our labor EQ tool. And our labor EQ tool is going to allow us to actually come in and look at this information and dial in the characteristics that we're specifically looking for from a broader context. And so this will allow us, as Chris had mentioned, if we were coming in, if we were looking for transportation, we could come in and pull transportation. If we were looking for warehousing, we could come in and look for different types of warehousing, transportation and warehousing. In this specific example, looking at pharmaceutical and medicine manufacturing and looking for a size event of around 200 people from an expansion standpoint. And so when we pull all this information in, once again, more of a dynamic search, pulling all of our databases and a power query, pulling it all together, and it will point us in the direction of some of the best places to go based off of the different weightings we chose in the right-hand side. And so we can dial things in looking for labor availability, training pipeline. And this is going to tell us locations across the United States right now that kind of fit our weightings and the parameters that we're looking for. And so right now we're offered everything across the board from the spectrum of red, which would kind of be a no-go area as that fades up to a darker green, which is definitely going to point us in a better direction from a location standpoint or a site selection standpoint. Now, a couple things to think about when talking to site selectors and corporate entities looking to expand. A training pipeline or being able to build out your bench of employees is a big concern for a lot of companies, not just having the available labor, but being able to come in and look at a training pipeline, as well as if we come in and take a look at some of the cost of living here, and we could add that specific information in as well to look at those parameters and change the different weightings. And of course, we could come down and look at our supply chain, a number of different characteristics. And so when we dial this in to really look at what we want, it's going to point us in a number of different directions and actually give us the ability to pick and choose and look at these different weightings. And of course, everything that we're looking at now can be sent to Excel. And so when I come over and actually look at our decision grid based on the rankings and orders and the parameters that we just created based off of the weightings that we had. And when we get here, if we wanted to change the weightings the same way we did in the first screen, we definitely could. We come across looking at the availability of labor, payroll information, industry competitiveness, supply chain, things like that, being able to export this and send it out as well. But what it draws my eye across to is really coming down and looking at payroll for Indiana or Indianapolis and Indiana, fairly high, but then the industry competitiveness. But my eyes were kind of drawn to the Raleigh, Cary, North Carolina area. So payrolls may be a little bit higher than what we want to look at, but when we look at an average training pipeline, cost of living, this gives us that perspective, and now we at least know where to go. And of course, you could do this if you knew the exact location you wanted to go to. We could pull that in and take a look at it as well. And so once we've defined where to start from a site selection standpoint based around the parameters we've set forth across that industry, then we can actually come in and take a look at what's to occur if an expansion event like this were to happen in an area. How is that going to affect? Do we have the labor to support an endeavor like this when we're looking at a pharmaceutical and medicine manufacturing plant? And so when we came into the Raleigh-Durham area, I'm going to show that momentarily, but when I go back and think of it contextually from a broad scale, once again from the top down, you think about different ports of arrival from a supply chain standpoint, import or export. Wilmington, North Carolina, they have a nice port there, but when we're talking about building a pharmaceutical facility and manufacturing plant, we could come in and look at Wilmington and say, all right, do we have the labor supply here to look at that? And we could say, no, we do not. Clearly, based off the number of potential candidates, per opening and what's available from a labor supply standpoint, we've taken the business profile of a pharmaceutical manufacturing plant and put it in JobsEQ. And so it's going to tell us we need 10 chemists all the way down to 3 maintenance workers. And so to really fit this profile and build it out, it might be hard to do that in Wilmington. But once again, this is an example of how you could come in and look at a particular area that you already knew in a region where you wanted to be versus looking at that dynamic search across the United States, or what I'd refer to as a power query, pulling all of our data in one place. And so in taking a look at this information, it pointed us to the Raleigh-Cary, North Carolina MSA. We'll still have an event size of 200 people. We can change those inputs as well. And when we come in and actually look at Cary, we can see the new employer demand, the employment based off place of residence, our unemployment information, average regional wages, average national wages, unemployment extended. And you may be asking yourself, well, what is all this telling me? And the nice thing about JobsEQ, because we believe in transparency and letting everybody know where we're getting this information from, wherever you are on JobsEQ, regardless of the analytic, that question mark will actually follow you around. And so we could come in and look at, help or data dictionary help for this. We can see where we're getting the data from. We can get a definition of what extended employment or employment extended actually means. And then more importantly, that column at the very right-hand side that looks at the labor available will tell you, it's the ratio of the potential candidates that we're looking at from a red, orange, yellow, green scale, with roughly the ratio moving towards a shorter labor supply in red to an ample labor supply in green. And so this is telling us, versus the Wilmington example, that we didn't have enough candidates. Here in Raleigh, MSA area, we actually do. Now, one thing that jumps out is looking at chemical equipment operators and tenders. All right, we might need to look for some of those, but we could actually come in with JobsEQ and create a custom location or a custom region, if you will. So right now, we're just viewing the MSA for the Raleigh-Cary area, and you might be thinking to yourself, well, Skip, what does that exactly mean? We can come in and show that to you with the click of a button, and can come in and say, this is the specific area right now that it has mapped off and that it's using. I apologize for my delay with the internet here and loading. We normally obviously move a lot faster than that. But previewing this MSA region, okay, that makes sense. But coming in and being able to create a custom drive time area or a custom topography that you may be looking for, looking at different metrics to create your custom region. I've come in and looked at Raleigh, North Carolina in a 30-minute drive time radius. And I've done this based off the zip code level. One of the nice things about JobsEQ is that we provide data and information across the nation, down to states, cities, MSA, counties, zip codes, and even down to block level data. And so you'll notice what I've done here is I've created a 30-minute drive time from a custom region that I created for the Raleigh area. So I'll plug this in, and it might make it a little bit more realistic versus the shape of the MSA. We can stay here in pharmaceuticals, or could have gone to transportation or warehousing and really drilled down into the 6-digit NAICS codes of those levels if we wanted to, or done a contraction event to see the reverse impact of this. But when we put this information in, now we'll put that same company profile into our what if analytic, and then we'll be able to actually come down and see, all right, with that 30-minute drive time, we've now decreased the number that we were missing and what we were looking for. And so we'll still be able to fill these positions within the area and find all of the employment that we're looking for. So we're in green, tells me with this in this area, we're good to go from a labor standpoint, really identifying the labor within a specific region or area. Because in this current environment in 2020 and in 2021, a very tight labor supply, it's even more important for expanding firms to understand the skills of a region's workforce and know if they'll be able to be supplied with that workforce for whatever plant or whatever business they want to bring in. And so when we look at it now, we've based that off training, labor supply to begin with from a labor EQ standpoint, pointing us in the right direction. Now we can see we definitely have the workers. We have a pipeline of workers available based off of the employment extended and the availability to find workers for our specific plants. But now the next question is actually wages. What is this going to cost us to do? And so we come in and look at a chemist, for example, and this is going to take a deeper dive into some of the more granular information that a demo or a product tour of JobsEQ would usually start with, whether it be our occupation profile information, or if we come down and look at our occupation wages. This is that more granular data that we're pulling in from a number of different sources and compiling in one place. And so you may be able to say, I could go to a local board and be able to figure that out, but you have to keep in mind that we're pulling in this information from across the nation. And then it gives you the insight to look at states from a site location standpoint if you wanted to compare wages, but also different locations or different cities. And so when we look at a chemist in the Raleigh-Durham area, we can then see what they're going to be paid. But when I look at that 30-minute drive time from around Raleigh, what I could also do is include that custom location I've created and put that in any other analytics around. And so if I were to look at, let's just say, a neighboring location is Durham, North Carolina, well, then we could put in, the Raleigh-Durham Chapel Hill MSA, granted neighboring, not that far away, but then overall broadly from a contextual standpoint, look at North Carolina as a whole for chemists and be able to get that information and look at these specific wages from a mean to entry level to what the experience is. And then, of course, comparing other locations. Once again, we didn't push towards Raleigh because the inputs for the location would have been somewhat higher. Granted, all of North Carolina at $79,000. And so here with a mean wage for chemists of $82,000 roughly. And so if I'm going to take a step back over into kind of our all tools section and or looking at the occupation wages for chemists within the area, we could look at this for all of the occupations within this and really be able to dial this in. And so forgive me for that. I'm moving a little too fast. I tend to get a little click happy when I'm passionate about the work that I'm doing and what I'm able to show clients and how we can help them and help their communities. And so in order to look at the suite of JobsEQ products and maybe not necessarily knowing exactly what to jump into, we're pulling back up our what if analytic from an industry standpoint and being able to define that information once again. And I'll just jump back in looking at our Raleigh drive time. Right now, I could click that 30-minute radius. Once again, you could make that whatever you wanted to make it. Pharmaceuticals and manufacturing, an event size of 200. And once again, repopulating that information and then being able to see everything from a profile standpoint. When we really take a look at the information surrounding a chemist, if you will, again, and I look at that because that's one of the higher input costs in the mathematics of running a facility. We could also see what that profile looks like, the industry occupation mix. But one of the things I like to take into consideration, and I hear other corporate clients and or site selectors talk about, is actually what other jobs are available or who else is hiring in the area. What's my competition? What other firms are there? And so And looking at all of the availability we have within JobsEQ from a tools standpoint, and I'm just going to open up JobsEQ in another web page. Apparently, my internet doesn't necessarily like the fact of our webinar jam right now with over 50 to 75 people on it. So as we locate this and pull this up again, going back kind of to our all tools page and what we actually do have available, you have to take into consideration, I've shown you our labor EQ, which is creating a power query of all those other analytics you're seeing, as well as our what if analytic. We can also look at the economic impact of an event like this, what's going to occur and the effects of that. But to pivot back to determining who is hiring in the area, what other corporations are there, what my competition is, now I can jump into our real-time analytics tool. And our RTI jobs posting data, we are scouring the internet on a daily basis, pulling from over 40,000 job sites, and then taking that and actually deduplicating this information. One of the reasons Richmond, Virginia keeps popping up is because that's kind of my set home location within the platform. And so if I pull in the Raleigh-Durham area again, we can come down, look at any occupations based off these level down to the 8-digit level if we wanted to. We could pull it over the last 30 days or go back to a year, because that really gives us insight within the region itself based on that. But to parlay off of what we were discussing before, if I come back in and look at a specific chemist role at that ONET 6-digit, 8-digit level, now we can pull that in from a SOC code standpoint and see that within this MSA area, specifically for chemists, I could come in and see that we have a total of 31 job ads. We can now look at this from a very specific standpoint, load these in, see who is actually hiring and when it came online. And so when we look for a chemist such as at RTI International, these are the parameters that JobsEQ is looking for and pulling from. But what we can also come in and do is look at junior chemist positions, anything with that information in it and what we're trying to obtain. And now we can actually go in and look at this job posting. And so we can see where it's coming from. If you're looking at it from a workforce fulfillment standpoint and you had somebody for a role that you wanted to fill, now you could go and send them this information. And we work to deduplicate all of the job postings as well. And so when we close this back out, now we could see based off of what those locations were, the total job ads once again, any type of employers that we have. And so the nice thing about our RTI platform is that it gives us the ability to hone that down to either non-staffing companies and staffing companies or all. And so now we could see Apex Systems as a staffing company. We could do that. But then if we just wanted to come in and take a look at what positions RTI International is using from a chemist standpoint, just solely that, because that's the other filter we have on. Now we could look at those and come in and click on that information. Coming in from a competitive analysis standpoint and looking at not just chemists, but possibly RTI International as a whole, we can see that they have 184 jobs in the Raleigh-Cary MSA, looking at 60 broad occupation categories, if you will, and then 184 broad jobs. And looking at the locations, because we've defined it to the Raleigh-Durham area, really giving us insight into that. The locations, once again, only one employer. But the nice thing is if you're coming to the area, what are they looking for overall broadly? We could do this from a chemistry standpoint, or right now in this context, it's all of their positions. So not just the certifications that they're looking for, but the hard skills that they want, the actual soft skills that they're looking for as well. And then, of course, the job titles as we're coming in to look at this information and what they have. And, of course, everything we could send out. Once again, as we come in and look at the different education levels that they have or that they're requiring with these job postings, and then, of course, any type of programs that they have as well. So all of this information is being gathered in our real-time intelligence job tool here. And going back and just looking broadly from Raleigh, North Carolina, over the past 30 days, we can see that they have actually had 54,000 jobs across 743 different occupations. And then, of course, the employers as well. If you wanted to come in and once again add this information and see specifically what it was from an employer standpoint, you could do that as well, add those to the filters and go in and do that, displaying this information. But also the nice thing about our RTI is that we can actually come in and set specific alerts for it. We can export all of this information and then, of course, reset the tool. And so this is going to give us that insight around the 4 to 5 core questions that site selectors are asking. And that is, where are we going, A? In what industry? Do we have the workers to fulfill that in the pipeline to build the bench out? What are the wages for the area from an occupation standpoint and a breakdown standpoint? And then what else or what other competition is in the area? And then, of course, also that competition leads to competitiveness, but also other people you might be able to hire to fill roles as well based on the strength of your location quotient for that particular location. So, Chris, right now, I know I wanted to keep it somewhat kind of brief and give this broad level overview to everybody and to you. And so I want to be able to turn this back over to you so you can speak further to the economy or the economic state of the nation.
Thanks, Skip. And stay on for 1 minute. There are a couple of questions.
Definitely.
I'll start. Chad asks, how granular does the labor EQ look? And Chad, we have a roadmap where we're always adding things. And if you're a client, then please be sure to let your account manager know that you would like to see this at at a county level or whatever. So we do have it on our roadmap to create labor EQ down to the county level. Currently, what we're showing you is at the MSA level. And then Eric asked, and I'll start with this one, then I'll turn it over to you and I'll switch the screen back to me. Eric said, for weightings, and he's referring to labor EQ, can you speak to your experience of how these weights change based on industry or how companies looking for a site choose a different weight? And there I'll start off. Call center is a good example. And even within that particular industry, you have differences. So if you have a call center that's for a technology type of a firm or, helping someone through the internet or getting some very detailed information, then those expanding firms or site selectors are looking at the education level, because we need a more highly educated population where we can draw more college students or people who have graduated from college to work at this particular call center. Whereas if it's customer service related to maybe clothing, helping them through a catalog, then it may be a region that's a lower wage area that is of more importance to them. Skip, do you have any other examples that you would like to share there?
Generally, like you mentioned, Chris, the call center is a great example, but all of that is going to depend on what type of industry it is. And so, your concerns around that training and or, as in my examples of building out, that pharmaceutical manufacturing plant, they're going to want to build a training pipeline and looking at that. They may have some higher demographics or parameters around the educational attainment as well, and or the cost of living. I've actually seen some people or worked with some entities from a real estate development investment asset manager standpoint that will also look at the location quotient specifically from the beginning, because that speaks to the competitive analysis or the competitiveness of the area versus broadly across the country. So unfortunately, we're using a very broad and dynamic search here, pulling all that information in. And of course, the parameters are going to get very specific and very focused as the examples get dialed in and people know specifically what they're looking for. But we have the ability to do that. And so that's why it's hard to say directly and specifically from one industry to the other what people are trying to dial in, whether it's employment growth or payroll. So it's kind of situation by situation dependent.
Yep. Thanks, Skip. Thanks very much for your presentation. Very informative. And with that, if there are any other questions, please post them, and we'll ask them as we see. We'll answer them as we see them, or toward the end. So, in terms of the national economy, remember that pre-COVID, the economy was fundamentally sound, and in most countries across the globe, a recession is defined by 2 consecutive drops in gross domestic product, which comes out quarterly. But here in the U.S., we have the National Bureau of Economic Research that defines recession dates. And in gray shaded areas, you can see the last 2 recessions. They also define when the recession ends, and they have not yet done that yet. We have a running joke that the NBER, which is the Business Cycle Dating Committee, which is made up of about 4 academics, they typically wait until the recession is over before they've even declared it started. In this case, it was very clear that the recession started, and they're probably waiting to see some more data to determine when exactly the recession ended. But here on the left-hand side is employment. You can see that employment grew very quickly over the past decade, and we lost all the jobs that were gained over the past decade during the first month or 2 of the pandemic. You see employment is coming back at a pretty good pace right now, but we don't expect to get back to pre-COVID levels until sometime into next year. On the right-hand side, another indicator that the NBER looks at, and that is income spending by consumers as well as income. And this is very important because consumers make up about 70% of GDP. So we're looking at year-over-year numbers. Consumer spending on goods and services plummeted as we went into the recession. And now you see the big jump in spending. We saw a couple of jumps in income because of the money from the CARES Act and the other money that was given to consumers in terms of households, as well as the increase in unemployment insurance due to the relief packages passed by Congress. At the bottom here, now you're looking at industrial production, or how much output is there from manufacturers, from utilities, and from mines. And you could see again the plummet as we went into the recession, and the numbers have come back fairly well. Here they dropped off because of the snowstorms that we were seeing in the southeast back a couple of months ago. In terms of GDP, on the right-hand side, you're seeing the first quarter of last year as we went into lockdown phase, and then annualized drop of around 30% during the second quarter. The rebound came back in the third quarter, and in the fourth quarter, some fairly good growth. The latest numbers for the first quarter of this year, 6.4% annualized GDP growth. And as you look forward, you see we have some very strong growth over the next year and a half. And that's because of all of the stimulus money that we're seeing right now, as well as the Federal Reserve being stimulative in terms of their monetary policy. Okay, so to summarize regarding COVID-19, before the pandemic, the economy was fundamentally sound. The NBER declared that the recession started in February. We saw it in 2 stages. There was a supply shock when we were told that non-essential businesses were to close. Citizens were asked to stay at home. Stage 2 was the demand shock. People were not spending because they didn't feel safe going out and spending like they did in the past. Now we're in the recovery phase. And of course, the vaccine delivery is very important to full recovery of the economy. And the biggest question now is, when will we get to herd immunity? So from that point of view, we took a look at herd immunity back in a few days ago. And here we have a model that we've been running on a weekly or so basis. And if you'd like to see more about this, you can go to our website and look at our blog. On this chart now, you're looking at the confirmed cases of COVID-19 infections in the U.S., and you can see that we're down to the lowest levels since mid-2020. Of course, we're economists and not medical scientists, and so we're relying on the University of Washington to provide information for us on the path of infections going forward. So typically, we economists have our models that are based on assumptions, and those assumptions are when the interest rates are going to go up, when the Fed's going to push up the federal funds rate, whether the price of oil is going up and down, and things like that. But in this case now, our models are relying solely on or mostly on medical conditions here in the U.S. So with that, and again, you can click here and look at our blog with more detail about this model. You can see we have 3 scenarios. The optimistic scenario is that we get to herd immunity. We're defining that as 80% of the population either has had the virus or has been vaccinated. And we see in the most likely or the most optimistic case that it's in the fall that we get to herd immunity. What's the most likely case right now is we get to herd immunity at the end of the year. And the more pessimistic case is that it doesn't happen until 2022. Perhaps in this case, less people get vaccinated, or some of these strains the vaccine is not effective against some of the new strains that are coming out. So again, some of our assumptions here about the number of vaccines purchased from Moderna and Pfizer: 600 million, 200 million from Johnson & Johnson. And as of the 26th of May, over 165 million Americans, or almost 50%, have a single dose, and 40% are fully vaccinated according to CDC. And on average right now, we're seeing about 1.7 million doses per day. To put that into perspective, at the beginning of the year, it was 1 million doses on average per day, and we got all the way up to 4 million just a couple of weeks ago, and now that has slowed down a bit. We also worked into the model the hesitancy rates by state, and we get that from the Census Bureau Household Pulse Survey. And again, 80% is the expected threshold for herd immunity. So how does this look like by state? How is your state faring? The green states, the darker the green state, the faster we're getting toward herd immunity. The darker the blue state, the slower we are in getting toward immunity. Now, taking our most likely scenario, you see some of the green states that are getting to herd immunity in September, the lighter green in October, and then the green sort of gray November, and then the dark blue not getting to herd immunity until February. So again, if you'd like to take a look in more detail at your state, you can go to our blog and look at that. And finally, one more thing that's really cropped up, and that is the idea of inflation. And of course, if we do have a pickup in inflation, that will have an impact on whether you're seeing some firms that are expanding into your region. They may put off their decision to expand if the capital expenditure cost is going to go up too much. So this is one thing that we're watching closely. In general, we've seen building costs go up. Here I'm showing you plywood as an example. If you were to look at steel, you would see a similar spike in steel. Copper, a bit of a spike, but not historically as high as what we're looking at here with plywood. So gray shaded areas, again, are recessions. Big question is this transitory? Is it temporary? Is it only a spike right now because supply cannot keep up with demand? And so that's the big question, of course, we're looking at here. We can see that lumber prices did finally start to come down, which supports the idea that it could be transitory. But on this next slide, we're looking here at the spot prices for lumber to get a sense, the future prices, to get a sense of whether or not, again, this is transitory. And here you can go to the CME group to track that data. So in summary then, the economy is moving closer to normal, and that's great news. We have a higher percentage of people who are vaccinated, and that's starting to really fuel growth. Consumers have money to spend from the stimulus. Their savings rates are very high right now. We had strong GDP growth. We expect to have strong GDP growth in the second half of 2021 and going into 2022. But in this environment of a tight labor supply, it's even more important for expanding firms to understand the skills of the region's workforce. If they move to a region, will they find the workers that they need? So with that, let me thank you again for attending this webinar. Please let us know topics that you'd like us to cover in the future, and we will continue to do these webinars as long as you find them useful. Please be safe, and we look forward to talking to you in the future. Thank you.